Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of October 6, 2025. Let's get started. SEAF signals for this week. XLK, XLU, XLY, which, if you've been paying attention, is actually a repeat of last week. I believe that is the first time that has happened this year. What does that say? That's good news in the sense that money is flowing directionally in the same place as it was before. What we can see here, though, is we have some relatively high scores in utilities and consumer discretionary. Consumer discretionary being really held up by its tactical month with its 2. Utilities being held up by its strategic quarter at its 2 with a trading week of 3 as well. And seeing a little bit of emergence of healthcare. I really like that positive trend of 10 to 4 to 1. And then energy sitting here at the bottom with the score close to the worst score that you can have with 11, 10, and 11 for a score of 32. Going into our heat map, a couple of things I want to note. Full up week last week. We had 1.6% in all assets. All 11 sector spiders assets were up 1.6%. 4 or 5 of the days were up days in terms of inflows. So, in terms of our relatively offensively skewed right now, utilities seems to be acting either as a severe hedge to technology or it's in lockstep with capex expenditures and continued AI excitement, which I think is probably more the latter than the former. But technology coming in at number 2 at a 0.92% increase here on the trading week. Healthcare coming in real strong with 0.57. I say this ad nauseum, but we did a little bit of a study, and a significant number for the trading week is 0.4 or above, and a 0.57 for the number 1. That's pretty strong. Also seeing some decently strong outflows from energy at 0.39% on the trading week. Communication services taking a little bit of a header after having a little bit of a strength here. Overall, a little bit light in utilities, consumer discretionary, and industrials. But again, enough flows to be kind of held up for the signals. Going into our sector AUM chart. So this is, for those who don't know, this is the sector total. Take all the AUM, the 11 sector spiders, added them up together, you would get a single number. That number is currently floating around that 334 billion mark. This is the all-time high right here, just mid-September. So we are testing all-time highs in terms of asset flows into the 11 sector spiders. Why is this chart important? Right here is our 21-day moving average. What this is telling us, and has been holding for really since April, is as long as we stay above this 21-day moving average in terms of our sector AUM, total sector AUM. Down here is a price chart of SPY. We have positive price appreciation in SPY. We've had a couple of little tests here. As you see, little lows, not relative to the upward trend of the market. But we came back and tested here late September and kind of been off to the races again. That aligns with what the SEAF model is telling us, is we're offensively skewed with discretionary and technology. And again, utilities behaving a little bit more like a AI type industry with all the capex spending and all the energy requirements for all these new AI companies that are starting up versus what has been historically a defensive stock for, people need to keep the lights on even if the stock market is down. Heading into our rainbow charts, healthcare. I wanted to mention healthcare. Healthcare is not a SEAF signal this week, but it is knocking on the door. We have obviously our our consumer discretionary and utilities sitting at 13. That's a pretty high number for a top-ranked sector. And again, healthcare knocking on the door with 15. What are we seeing here? We need to see some more flows, continue sustained flows, as we have seen this story really happen in August and September as kind of money started to rush in. We see little spikes of relative outperformance, and then it gets turned down as this has really been trading sideways going back to the beginning of, mid-September. So we need a little bit of extra push, continued push to kind of get us up here into this upper favored, where we could break through this upward resistance here on the relative outperformance versus SPY and really make a significant move. But very much encouraging to see that 0.57 on that trading week, but we will want to watch multiple weeks of this before we really start to see this get into favored, even upper favored, and become a SEAF signal. As of right now, nothing to do. If you are an aggressive, looking to make an aggressive move, this would be around the time to do it. But again, not a SEAF signal, not recommending a trade here, but really nice strong inflows. And again, I like that positive skew when we go from 10 to 4 to 1. Kind of starts to show that momentum start to switch and shift. So that is a positive thing to see. Utilities is a SEAF signal. We do have some nice relative outperformance versus SPY happening right now as an uptrend, as we have kind of gotten into favored and then not stalled, but sitting in that lower favored territory. But we do have some nice relative outperformance that we've been picking up for utilities. Utilities is still roughly in a downtrend. I would like to see it kind of break that. That could happen with some sustained flows in that upper favored ranking, but overall on the short end, seeing positively skewed relative outperformance versus SPY. Technology continues to rip. We had that little bit of a pause in late August here for technology, but overall has been sitting in that upper favored ranking, currently ranked about as high as we can get. It needs one more point trading week at a 2, leaves us only at a 4 with the highest, the best score of being a 3. So technology continues to rank higher. I'm going to have to adjust the chart parameters here just to fit this move on, but really strong positive uptrend in technology, which is really correlated with us being that upper favored ranking. Consumer discretionary, has been sitting into favored, slight positive uptrend in consumer discretionary and its relative performance versus SPY. Sitting in that low favored. Would like to see these things, kind of jump up and get some stronger flows. Consumer discretionary at a 6 on the trading week, really being held up by its 2 on the tactical month. But again, ever bit slow positive uptrend in consumer discretionary. The SEAF model really aims to be in the top 3. Does that mean the top 3 are going to drastically outperform the market, similar to the way technology has been over the last couple of months? No, that's not necessarily how this model works. The idea is we're tracking the flows, we're tracking the momentum. We want to be in the top 3 that are showing the best flows, the best momentum, and the idea is that we can catch some of these broader moves. Now, we do see a little bit of higher correlation with the upper favored with these better relative outperformance numbers. And we haven't really sat in that upper favorite here for consumer discretionary. But, again, we're not projecting. We're not trying to guess or tell you that, because we're seeing some flows now, that means the flows are going to continue in that direction. We are trying to catch the money as it is flowing into the sectors and pick up the relative outperformance like we are in technology right now. So that's not to say consumer discretionary cannot break out next week. But it is saying that, we are a bit sideways with consumer discretionary. It is just the flows are better than the 11, the other 7, 8 sector spiders. Sorry, I was doing a little slow on my math today. Energy. Wanted to bring up energy. Energy is at the bottom of our SEAF model this week. And again, it continues to kind of pull these little fake outs here. We come up, we touch favored or upper neutral. We get these little spurts of relative outperformance, but nothing is sustained, and we are still sitting in that downtrend. For me, I'm really looking at energy. I do need it to get up in upper favored. I do need to have some sustained weeks. We can get away from this heart attack looking SEAF rainbow chart. Just nothing has been sustained. That money comes in, it rushes in, and then it rushes right back out. Really need to build up that momentum over several time periods to get this thing out of a void and really turn up this relative outperformance versus SPY, as we are in kind of a lengthy downtrend for energy. Really, peaking here in March of this year and down since then. Nothing to do with energy. We got to get away from these intro spikes as the money is flashing in and flashing back out. Potentially managers taking a lead off, understanding that energy has been relatively underperforming for quite a while, and hoping to start a trend. And as they see that that trend doesn't continue, they roll right back out. Nothing to do in energy. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week.